What's going on, guys? Brian's here. Today's Thursday, December 8th, 2022, and the market is closed. Now, I'm recording this video as a direct message to some of you guys that I think have been struggling, trying to find your way, navigating this crazy price action in the SPY as of late. So the S&P 500, the SPX, the ES, pretty much any derivative of the S&P 500. Jumping right into it, what we're looking at is the price action as of this week on the SPY. This is the 5-minute time frame. So this is Monday right here, and then this is Thursday. So the past 4 days worth of price action. If you're viewing this video on YouTube, then just know that these levels that you see on the chart are generated by the quant trading app Algo. Links are in the description if you're interested in that. I'm not going to spend too much time explaining what each of these levels are in this video because I don't want it to be too long and there's a lot that I have to cover. Right off the back, if you're new to trading, there's something I want to address. It's very easy to become distracted when you're trading, especially if you're day trading. There are a million different ways to trade, and there's so many different strategies out there, and it's very easy to jump from one thing to the next without actually taking the time to generate good habits or good discipline. What I'm specifically talking about here is identifying 3 to 5 main setups or main strategies that you know work for your personality. In this case, I like to wait for the break and retest, which is why I'm consistently always mentioning look for a break and retest type of setup. I think it's very easy to spot. It doesn't require you to be very fast thinking. You can take your time, you can be patient, you can let the setup unfold and come to you. And then the other thing I'm going to be talking about is this right here, which is the 2-day anchored VWAP. I've done at least 5 videos, I think, on this YouTube channel. I've also done a dedicated video on why the 2-day anchored VWAP works so well. Links will be in the description down below. If you're a gold member in Quant Trading App, you know I shared the video this morning after this setup kind of took place. Again, just trying to drive it home or at least drill it home if you're new to seeing this type of stuff. Now, yesterday I mentioned it about 5 minutes before the market closed about we've seen this type of setup happen time and time again and what to look for. So if we check out the Discord, the message in which I'm referring to is this one right here. So we've seen this setup play out a bunch of times. If the SPY gaps up tomorrow and it is above the 2-day anchor VWAP and breaks out of today's value area, it will be a good long setup. So we'll get to the value area in a bit later in this video. That's pertaining to the volume profile. And then on the other end, if it breaks Monday's low, we can expect continuation down to 2 sigma support. So I made a mistake when I said Monday's low. I meant to say Tuesday's low. So if it breaks Tuesday's low, which is this day right here, we can expect some continuation, in this case, down to potentially 2 sigma support. We will go over what I meant by that message as well as how I knew this was likely to happen today. After a while, you'll come to learn that this will happen usually 15 minutes after the market open or 30 minutes after the market open. It happens pretty much on cue, around the clock. Many times. I can't stress over the past 2.5, 3 years or so how many times I've seen the exact same setup play out, and that's why I'm confident in just sitting back and waiting for it to happen. First, let's address the break and retest strategy. If you've seen this slide a million times before in this channel, I apologize. Again, I'm just trying to drill it home with you guys. The break and retest, this is a screenshot from the video in which is dedicated to this where I go over the psychology of why this works. If you find yourself constantly chasing, if you find yourself always entering trades late, or if you find yourself constantly hesitating, this would be a strategy in which I recommend to you because you can sit on your hands and just wait for it to unfold. Essentially, if you have a clear level that breaks, whenever price comes back to it, it's very likely to retest the level and then continue in the direction. We're talking about key levels, major levels, not random levels on your chart. If you're in Quant Trading App, the levels that you see right here that are generated from the algo are not random levels. There are statistical levels and the building blocks for a lot of what Quant Trading App is built upon. So in this case here, we have on Tuesday, this level actually broke. That's not something that's very common, especially this early in the week. The first retest of that level is generally going to present some sort of good setup. So this, if you're trading the break and retest, even if you didn't take a single trade because you didn't understand what was happening here and you told yourself, oh, hey, this level broke, I'm just going to wait for it to come back to this level and then I'm going to look to short the market. If you're a day trader, you know you have to use VWAP. If you're shorting above VWAP, then taking profit at VWAP is the proper thing to do. And if you're going long below VWAP, then selling or taking profit at VWAP is the proper thing to do if you're following just good discipline of being a day trader. So again, just repeating that, if you're shorting way above VWAP, your first profit target is generally going to be VWAP. And if you have high conviction or you have high reasons to believe that you shorted at a really good opportunity, your next profit target is generally going to be the low of day. And then if that levels breaks, you should be looking to scale out anything below that, whatever is the next major structure level on your chart. But for the most part, VWAP is generally going to be considered the mean for the day. So that means if you're shorting here, you're essentially shorting a reversion to the mean. And if you're going long below VWAP, you're essentially selling at the reversion to the mean. If we were to just put a name on what I mentioned, we have the break and retest. So I'm just going to abbreviate that as B plus R. So we have the break and retest, and then we have the reversion to the mean. So reversion to the mean. So MEAN. And those are a couple things in which you can look up. Break and retest, reversion to the mean. So it's a combination of two things. If you're coming from the time of using something like TradingView to journal and document your trades, you know you generally have to put a tag for the type of trade that you took. So this is just good discipline. If you work for a prop firm, something like S&P Capital, you're going to have to label and tag every trade you take. If you can't assign a name to the trade you took, it means you were just taking a random trade. In other words, if I was to short right here and I was journaling this as the market closed and I was writing down in my notes, or I was writing it down in a journaling software, what type of trade did I take, I would say it was a B plus R, so break and retest, and then it was a reversion to the mean strategy. So those two things are the labels for this trade. If you're just buying because you randomly think something's going to go up, or you're just shorting because you randomly think something's going to go down, you're essentially just throwing your money around, hoping or gambling, wishing something works out in your favor because you have no clear identifiable plan. The reason I like the break and retest is because it's essentially a defined loss here. In other words, if I'm shorting here and I see this first major rejection, I decide to get short right here, my stop loss is going to be over this level if the price breaks above it and closes above it and does not rebid below it. That's just my own personal rules, my own discipline practices. The same thing, I know covering at VWAP is the smart thing to do. So that in a sense creates some sort of order or structure. I'm coming in with a predefined plan from the previous day. I'm already expecting that to happen. The same thing now, if we rewind and we talk about this 2-day anchored VWAP retest right here. For the Quant Trading app members, if you guys just come right here, and this video has been shared many times, it's something that you should watch as soon as you become a gold member within Quant Trading app, right here on the introduction to the quant levels and zones, and then the 2-day anchored VWAP. So those are the main things. So we have just getting familiar with the application, we have the levels and zones, and then we have a little bit of the information on the 2-day anchored VWAP. A lot of this will be updated in Q1 of next year. That is the plan, but just know there's a ton of videos that are out there on this subject material. If we were to come to this video right here, which is the introduction to the quant levels and zones, you guys can just come down here and you guys see the chapters actually listed. You can scroll right along, and then you want to find the break and retest of the weekly level, and this is what will bring you to this chapter. Within this chapter right here, I just end up going over a couple examples. This is using Square. So in this case, this is the break of the weekly level. It goes all the way up to 2 sigma. This is on an earnings beat, and this is the first retracement back to the weekly level. We get a bounce. In this case, we ended up getting a couple bounces before price continued in the direction in which it was going. It's similar to the downside. So what we had is this is the break of the weekly level. Price was selling off. We didn't go all the way down to 2 sigma, but then we retraced back up to this level. So then we get a little bit of a continuation. Now we can see that there are other levels at play today. This blue level on the chart is known as max pain, and it was actually holding price up for majority of the day after it broke past it. So max pain is going to act as a strong support and resistance level throughout the day. If you've been in Q2A for a couple months already, I'm pretty sure you've seen this many a times right now, so it's not even something that I necessarily need to explain. But how can we take things further and not just rely on technical analysis, patterns, or strategies that usually technical analysis traders might use? This is where having a little bit of information or data at your back ends up becoming very useful. If we actually come right back to the dashboard, you can actually search for the SPY here, but we'll just go to the dashboard. And if you click this right here, and it'll bring you to the open, high, low, close table. This is going to show you the historical information for the past few years, but we don't need to jump to every single year. We're just going to take a look at 2022 for a second. This is showing us a table of the weekly support resistance levels. So all the levels that the algo thought for this year so far. And when I mean support resistance levels, I'm essentially referencing this level right here that the algo is saying is likely to be support for this week, and then this level up here is resistance. It's calculating it, and then it's showing us in the past the support and resistance level as well as the 2 sigma support and resistance level. It's highlighting every time the 2 sigma resistance level was broken or the 2 sigma resistance support was broken, as well as if it closed within the resistance and support level. So that's why these are green. These are green because price closed within the levels in which it thought it was going to close. And then it's letting us know right now this has been a very low performing year. This should be closer to about 64 to 67%. So it's underperforming, but we already know it's because we're in a bear market and there's been a lot of increased volatility. So that's why these numbers are going to be generally a little bit lower than usual, as well as these 2 sigma support level. It's been touched 21% of the time so far for the year. This is very high, and then it's touched support 46% of the time. This is also very high. You can always just jump back to previous years and then compare it for yourself. Or for now, you can just take my word for it as we keep it moving. And let's go to this button right here, which is the toggle data. It's just going to show us the same information, but now it's giving us a breakdown by the day of the week. This right here is saying that on this Monday, it actually broke down below support. So we can click this and view that day, or we can click this and view what that week looks like. So we can get a full view of the entire week. But what I want to point out to you guys is this current week in which we're in right now, the SPY actually broke this support level right here again early in the week. This Monday, this was a pretty bad Monday, and then we actually continued to sell off and hit the support and close below it on a Tuesday. That's not common. The reason I know that's not common is because I can come here and see only 12% of the time so far for the year did it even touch that support level. So that's 6 breakdowns out of 48 weeks so far for the year. Again, not very common. The shaded area means it was below it, but it did not close below it. If it's highlighted red, it means it actually closed below the level. But for curiosity, we can actually click these now and actually pull up that week and just get a view or a snapshot. So I'm just going to pull up that one, maybe pull up that week, and then maybe let's pull up this week here, and then we can kind of see as an example if we find a week that's similar to the current week in which we're in. This week doesn't really exactly match the week in which we're in, because yes, it did break the level here on a Tuesday, but we can see it actually didn't have that bad of a Monday. Yes, the market gaps down, but it was kind of sideways and it actually ended up closing up. So I'm just going to close that one out. Let's jump to this one. Here's a really bad week in which the market sold all the way off and it went all the way down to 2 sigma by that Tuesday. But we can see in this case here, it was very difficult for the market to actually close back above the weekly support level. So I did a previous video also on this. If you guys know, I like to think of it as particular zones. The market is either going to close in zone 1, 2, 3, or 4. At least 90% of the time is going to close within one of these regions. And for traders such as myself, that's a predominantly swing trader. I trade a lot of butterflies and a lot of calendars. Knowing which region it's likely to close helps me have some sort of tremendous edge, because I'm generally looking forward to Fridays. Early in the week, it's mostly just setting up my positions towards the end of the week and then just managing my risk, making sure I'm not putting on too much overnight directional risks, giving it a little bit of a slight bias. If I know right now, almost every time I can tell you, at least if there's been, 8 or 9 times, there's only been one time from what I can remember in which the market, if it breaks below this level, that it closes above the weekly midpoint. So almost every other time, once the market breaks the weekly support level by the Monday and Tuesday, if it's still below this level by Tuesday, I'll say roughly 9 out of 10 times it's going to close below this level. So just knowing that means you can sell, some sort of bear call spread, means sell this call, buy an out the money call, and just let theta do its job. Or you can run some sort of iron condor, maybe something like this. You can run some sort of double calendar in this region. You can run some sort of iron fly, maybe within this region. Again, if you're trading spreads and you're a swing trader, you have so many different options for how you're going to use this information, which is what I like doing. I'm really looking for that micro scalp, but I'm going to show you guys, especially towards the end of this video, as we review some of the 1DTE options and the type of opportunities that are out there using this same information. But let's just keep it moving for a second. So we'll close that one out. Let's just jump, close. Let's check out this one. So again, this week doesn't necessarily match, but again, here's another week in which the market ended up closing down. And let's continue. Now I'm just going to open up all of them and just glance over them to show multiple examples. Again, I'm just clicking any weeks in which it either broke the weekly support level on the Monday or by the Tuesday here. So click this one again and clicking this one. So again, this week, these are the ones that are catching my eye. And then we can see here's another week, it closed down. So if we close this out, here's another week, it closed down. Yes, it made a nice rally and then it ended up closing down anyway. And this was the Tuesday in which it broke the level. So if we continue right along again, we're going to come back to this week in a second because this one looks pretty close to the week in which we're in right now. So we'll skip over that. But again, even before, when we come back to this one, we'll review it in a little bit of a greater detail, but we can see the same thing. This ended up closing pretty much down for the week. If we open up this one, same situation. In this case, it was a rare close below 2 sigma. And let's see what else we have. Again, another week in which it closed down. Yes, it made an attempt to go up, but it ended up closing down. So let's see another week. This week definitely doesn't match the current week as the market actually gapped up on a Monday. And then I guess this must have been some sort of catalyst. It might have been a CPI report or something that came out. The market ended up selling off pretty horribly here. But again, it doesn't change the stat that it ended up closing down for the week and below this level. And then let's see, we'll stop there. So now as we jump back to this one, here's a week in which we have multiple break and retests. So the market breaks the weekly resistance level on the Monday. It tries to reclaim it. Here we have VWAP also aligning with it. However, price fails. So let me just expand that for a second. So price fails. Then the next day it gaps above it. That's fine. But then you guys see it ends up struggling here the first 30 minutes of the day or so. So this right here is about 10-20, so 40 minutes after the market opened, it ends up breaking back down below the level, and then we can see it tries to reclaim it and then it fails. So we have multiple retests here. Failure, 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 tries to reclaim, can't hold, failure, failure, failure. Let's turn it on a 15-minute time frame to see what that actually looks like. Failure, spinning top, some sort of indecisive doji candle. This does not look strong at all. Failure. We have a hanging hammer candle, I believe you call that. Failure. So these are all reversal patterns. I'm just calling out just random different ways from most of you technicians out there, guys that like to read Japanese candlesticks. Failure, failure, failure. The moral of the story, break, retest, and then we have multiple retests. This was the gap up over it, whatever the reason was. Not sure if there was a catalyst or anything, but it doesn't really matter. This is one instance in which it gapped up, but at the end of the day, that level ended up being very prominent. That's again, the core basis of QTA is going to be this level, and then you have your 2 sigma levels here. That again is the primary building blocks. Now, to take things a little bit step further, I told myself I was going to jump towards this a little bit later in the video, but I just have to show you guys also, because I left a message in the chat because it's something I mentioned this morning also, but you guys have heard me talk a lot of times about the gamma exposure and the archive right here. So this was posted automatically pre-market here. We can see at 9:15, so 15 minutes before the market opens. Here is our 397 level. So this is the current spot price. This is where the SPY was 15 minutes before the market opened, and this right here is going to act as resistance most likely. However, if the SPY can clear this level, it has some sort of an opportunity to run towards the 400 level, which is the positive gamma strike, and this was the strike that was getting a lot of open interest and as well as a lot of volume as the day trading session ensued. We can even take a look at the previous day and see, you can see right here, 400 was getting a lot of volume. So the blue is just saying volume, and it was getting over close to 90,000 volume yesterday. And then we can see as the pre-market, there was a lot of open interest around the level. Also, it was something about 37,000 or so open interest. So that's one way. If this is your first time hearing or seeing anything like this, the way I like to say this is the chart that you're looking at is 2-dimensional, and then looking at something as gamma exposure adds that 3rd dimension. So it can show you the depth or how powerful the level is. And as we can see right here, 390 is a very powerful level as it's the absolute gamma strike, but it also has a lot of negative gamma overall. So this is likely to act as some sort of support. In order for a level like this to break, you need to see implied volatility increasing. That's usually going to help the level break. It's very difficult for a level to break like this if implied volatility is not increasing. A little trick to use if you're not using the VIX, you can actually take the 390 put on your chart and put it side by side the chart of the SPY, and then you can watch if that 390 put is holding its value and you don't see a lot of time decay on it. Because it is an option, it should have time decay. That's a sign that the implied volatility is rising even though time is passing. So that's just a little bit of a hack. It's something I like to do. I would generally only do that if the market was if it was trading closer to the strike price. So let's just say the SPY was at 392 or 393, then I'll put up the 390 put just to have it up on the chart, the Friday expiration, and just to see again if it's decaying. If it's not decaying, even though the market could be going sideways or choppy for a bit, that's usually going to be a sign that we're probably going to continue heading to 390, and then that level is even likely to break, especially if you see the VIX increasing. On the other end, another way to look at this, let's take a look at the SPX, and we can see right here, let's go to pre-markets. This was all as the market was open. So yesterday, today, right here. So 13 minutes before the market opens, this is where the SPX closing price was from yesterday. And then we can see that the max pain level was 3,975, which is pretty close to 397 on the SPY. It's not an exact number. There's about a 10-point difference or so. So you have to add a 0 to the SPY. So 397 on the SPY is closer to 3980 on the SPX. There's a little bit of a skew or a difference there, but 397 is right in the middle. So we can pretty much say this general area. And what do we see? We can see some negative gamma exposure, whereas things are pretty flat right here, which means once the SPX kind of gets over this level, it should be a pretty clean shot up to 397, which happens to be max pain, which is going to act as some sort of resistance in confluence with the fact that we have this clump of negative GEX. Something I've also mentioned pertaining to gamma exposure, whenever you have, say for example, a positive gamma strike surrounded by a ton of negative gamma strike, that's generally going to act as some sort of resistance right at that level. As soon as the gamma exposure turns negative, it's going to act as some sort of resistance. And then the same thing, let's just say there was a positive gamma strike right here and everything around it was red. Likely, if the market was to sell off this one green strike, let's just say this was 3,860, that's likely to act as some sort of support. It's just the way that works. So something to keep in mind. If we take a look at the SPX, so 3975, let's take a look at the XPX for a second. Here we have it. Let's zoom in. And let's see, right about here, this is 3972, 3973, and the exact high ended up being 3974 and 7 cents or so. So exactly 1 point off of the level. Again, this is from pre-market, guys. You can do this preparation here 15 minutes before the market opens and then be aware of the levels. Then you can, in a sense, sit back and wait for your setup, wait for the opportunity to come. On top of that, you guys can see how close this was to the weekly support level for the SPX pertaining to QTA. So it's roughly about 10-12 points or so around the same vicinity. So you can see it, you can think of it as this entire area here. There's a ton of negative gamma that we can see on our charts. We know if it clears that, it's likely to go to 4,000, but then we can see there's probably going to be some sort of supply in this 4,000 area. So that right there is a little bit of a game plan. That's something that I do either before the market opens or the day before, and then it's mental. It's as simple as the note in which I mentioned to you guys in the Discord here, like this message here. And if we fast forward to the message, so this is 6 minutes after the market closes, 6 minutes after the market opens today. I'd be surprised if the SPY claims 397 today or tomorrow. The odds are more likely it closes below 397 this week. So between 397 and 2 sigma support down to 387. Now, I didn't make this number up. Now, hopefully you guys see this. This number wasn't random. It wasn't an arbitrary number. It wasn't a number just based on some sort of technical analysis. It was based on the fact that this was the weekly resistance level. It was based on the fact that it is the break. It is the retest. So this is, again, from pre-market. At this point, the market was down here as I was doing a little bit of my analysis. And then 6 minutes after the market opens, that means the market was right here. This was right before we were coming down to the 2-day anchored VWAP. It was already outlined from the previous day what to expect or what to look for. And then how you decide to execute the trade is completely up to you. I chose this opportunity to close out some of my 3,850 put calendars, looked to grab some calls. I also grabbed some 390 put butterflies for tomorrow, because this is what I would not be surprised if it happens, just based on the analysis, understanding that the fact that we were struggling to reclaim this level earlier in the week, I don't have high expectations for it. However, tomorrow there are a couple catalysts coming out. If we take a look at the news for a second here, we can see there is the PPI numbers that are coming out, as well as the consumer sentiment numbers. So these types of catalysts can obviously break the technical analysis and anything can happen. However, that aside, I'm not going to throw out the fact that this is still likely. So I almost have to put some sort of risk out and see if we end up getting a close down at this level. We'll take a look in a second also at my positions and how you can go about this, because I spent this time, we've been in the 4,000 call calendars for I think about 2 weeks now or so. So today was an opportunity to start scaling out, start taking some profits. I only have 2 left. So if the SPX does rally up to 4,000 tomorrow, it's going to add at least 1,500 to my P&L for the week. And then if we do come down to 3,900, you guys can see I have at least 1/10 at that level. If we stay in between, this will probably slope a little bit. It'll drop, and I'll probably end up walking away with about $500. But then obviously that's assuming I don't trade at all tomorrow. I'll probably run some sort of at the money butterfly in the ES or something like that. But as usual, my specific trades are not necessarily relevant for understanding what's going on, because again, there are a million different ways to use the same information. And I understand your trading style might not work for me, my trading style might not work for another person, and so forth. On the topic of patience, the reason I'm pointing this out is because, guys, you will get burnt out trying to constantly navigate every single tick of the market. Think about what you're doing now and imagine if you want to be doing this 10, 15, 30, 40, even 50 years into the future. Trading is something that you can do until, we're Warren Buffett's age or something like that. And you have to keep that in mind. Is this something that you can sustain every single, making the right decision every single time? Or can you identify 3 to 5 major things you really understand, you have a firm grasp on, and tell yourself, for the next 30, 40 years of my life, I'm going to stick to just exactly what I know. You want to develop that type of confidence because it's going to help with a lot of the problems most traders have, from emotions to hesitation to, hesitation is usually a derivative of not believing in the setup or believing in your trading capabilities because you've been spread too thin, or you're constantly looking for too many things. If you tell yourself this is one of, my 3 to 5 major plays, major setups, you won't be as, hesitant, or you'll just execute. Like when it comes down to this level, you just say like, okay, that's a 2-day Anchored VWAP. I know whenever it breaks out, this is a setup. I learned it from this guy named Brian, or I saw it on YouTube, or I could check it out elsewhere. The break and retest, I've seen it a million times myself. I know this setup. I know what to do. If it fails, so be it. It's just one small trade. It's all risk and reward. If it fails here and you're losing $1, if it came down here, you're making 3, then you tell yourself this is a trade that's highly likely to work. Let's just say it works 80% of the time, then you can afford to take 20 losses. You're only going to lose $20. And then if it works 80 times and you're making 3, then you're making $240. So risk reward, it ends up being that you're net $220. So I'm not entirely sure. I just did that math on the fly. It might not necessarily add up properly, but the end of the story is that's a positive expectancy, and then your job is just to execute, not hesitate, because you know what to expect. This is compounded on a lot of multiple ideas here. We looked at the gamma exposure. We're taking a look at the QTA levels. We have the understanding of the break and retest. It's also a very big push that just happened. So you can feel confident in taking some sort of a short here, but you can also leave that trade aside and tell yourself maybe this is not the short you want to take because maybe the move was the up move for the day. So this is something you just want to walk away from, and this was already the trade in which you took for the day. There was 2 really solid opportunities here, and this is just in the morning session. We'll talk about a little bit later in a second. But the patience element comes from identifying and understanding it from the day before. So if we rewind back even more, we can add a little bit more simple data here. This is Monday. This is the end of Tuesday. The market just made a really big move. It's about understanding what to expect for the following day, and then identifying what's likely to happen, and then telling yourself, if what you thought happens, execute. If what you didn't think was going to happen doesn't happen, then maybe just use it as an opportunity to learn, or be surprised by maybe a setup that you do know. I don't like trading on days in which I don't understand what's happening, because then I'm not going to have any conviction, and you have to think about it for yourself also. You won't feel confident if you have no idea what's going on, and then you don't want to be sizing up on days that you have no idea what's going on. Those are the days you sit on your hands. Those are the days that the market will humble you. Those should be the days that you either paper trade, or you trade with it. If you used to trade with 10 contracts, you trade with 1 or 2 contracts, just to stay in to make sure you don't get rusty if you're a day trader. Sometimes taking 1 day off if you're a micro scalper or so can throw you off your game for the following day. So what I'm implying about knowing what to expect here, if the market just made this really big move, I was glad. I think it was Luke, if you're watching this video and you're in the chat, it was great to see pre-market. You were the one that mentioned something like sitting on your hands for the day, and the SPY is likely to not go anywhere. It was perfect, because once you saw that, it was like, obviously I know things have been going really well, at least the last time which we spoke trading, but it's look at this big move, right? If we come back to the site here and we close this one out and we check out the candle stacks, so under data, we check out the candle stats. What is the average net change for the market right now? Absolute net change. So whether it's up or down, right now it's about 4.87 points. That is the average. Let's go back to, so if we jump back to the chart, let's take a look at the net change from Monday. So this is the close from Friday, and this all the way down here would be the by the close on Monday. So it was down 7.3 points, about roughly estimating. So let me just shrink this a little bit. Again, the net change is just going to be from the previous day's close to the current day's close. So this case here, it's a 7.26 point drop, almost 1.8% on the SPY. That is a big drop. And then on top of that, we get another drop. So this is 2 days to start off the week, and then it's down 5.7 points. That's 5.7 points and 7.7 points, both over the absolute average net change. You combine those two, that is a big move for 2 days when there was no real catalyst. Now it is December, it's the end of the year. What's driving something like that? There's a myriad of different things going on. It could be hedge funds, selling out. It could be for tax purposes. It could be the rebalancing of, portfolios and all sorts of stuff that's happening. It's the end of the year. I've noticed every December, I see something wacky that I fully don't understand what's going on or why price is moving in which is moving. But I'm pretty sure we were all talking about this yesterday, how the volume was very weird on Monday. Volume was a little bit stronger here in the morning session on Tuesday here, but still, it seems like this was just entirely algo selling. It was probably just basket orders that were sold, that were told, algos were told they were given the order to execute liquidating certain positions. I think energy was down pretty bad. That was the sector that was getting hurt. So they're just closing out on maybe some energy positions because energy has done so well this year that they're then rolling it into stocks that are underperforming. Who knows what's going on? It's not our job, in my opinion, to try to figure out what's happening on when things are this random or in a sense weird, because at the end of the day, almost everything that's happening in the stock market is in a sense some sort of randomness to it. It's pretty chaotic. So your job is to try to bring some sort of structure and some sort of understanding. The understanding we do know is this is larger than the average net change, and then we have another day that's larger than the average net change, and then we have the break of some very significant levels. Whenever we have the break of some significant levels and the market goes much further than it normally does, the odds of it being consolidation day or the following day being some sort of consolidation day are exponentially higher. So what does that mean? That means you can either not trade on these days like this. If you're a day trader or you're a scalper, you're going to drive yourself nuts because the setups are garbage. You're just going to be there ping-ponging around, playing around with a bunch of other algos when most people have already capitalized on the opportunity for the week. And then if you miss this, you're thinking the same opportunity is going to happen here, and then you're probably trading with size in which you shouldn't. And that's just something that, the social conditioning that happens with us as humans, and the way the stock market in a sense prides on that. Like it knows. We understand. Most of us lack patience. It's not necessarily in our nature. And then most of us whenever we miss opportunities, we feel upset. So then we end up making even worse decisions on the bad days. But you can tell yourself, okay, if that just happens, this should not be a day in which I look to be aggressive. If you're a momentum-based trader, for days like this is actually an amazing day for me, because this was actually really bad days for me because I was trading at the money iron flies that expire on Friday. So these moves are not, accounted for. I was expecting the SPY to kind of stall out around here, but it ended up going lower. So that hurt me. And then this was another day in which it did the same thing. I was expecting the SPY to stall out around here and at least reverse back up to here, but it didn't. So this also hurt me. But then knowing what to expect on a day like this, if you run iron flies in the SPX and you're trading them and they're about 50 points wide, I'll tell you right now, if you're going with the current volatility, if you're trading a 50 point wide SPX iron fly, your max loss is generally going to be somewhere around 2K, and the credit received is going to be something around 3K, and you're almost guaranteed to walk away with at least $1,000 as a decent profit target. So you're not going to look for the full 3K in credit received unless you hold until expiration. But this is if you're trading some sort of 0 DTE or 1 DTE iron fly on the SPX. It's going to cost 2K in BP. Your credit received is going to be about $3,000, but just look to take around 30% of this credit, which is about $1,000, and this is per lot. For example, if we were to go to option strat As we head over to option strat, let's go to an Ironfly. Let's go to the SPX, and then this is tomorrow's expiration. And let's just make this 50 points wide. I like to just keep things pretty even most of the time right here. Obviously, you can adjust it and, adjust your skew and your deltas just to make sure it's a little bit more delta neutral. But here's an example. So tomorrow at the open, this is probably going to be around $2,000. That's how much margin it's going to require. The credit received is going to be about 3K. And again, you're just looking to, hit your profit target right around here. So if we were to hold this a little bit past the morning session here or so, and it's still hovering around here, you guys can see that's about $1,000, which I'm talking about. Obviously, if you hold this all the way until power hour right before the market closes, you can walk away with 2,000, 2,500 or so. Look at the net change on a day like this. The market opened here and then it actually closed right here. It only moved 31 cents, the SPY, so the SPX, that would have been about 31 points or so. This is an amazing win for an Ironfly because you're essentially saying the market's not going to go anywhere for the day. And if you're nervous trading the 0 DTE, just go with the 1, 2, 3 DTE, go with the Friday expiration or so. That's generally what I do. Or you can go with the SPY, because with the SPY, you can go 10 points wide as opposed to 50 points wide, which is the equivalent of 100 points wide on the SPX. So just to give you a little bit more increase in your POP. POP means probability of profit. So that's something that I will often do. If I know I'm trading shorter DTE, I'm just more comfortable going with the SPY because I want a little bit more of a wider range of profit. So there you go. Here's a plan, right? On days like this. So the next time you see something like this and you're losing money on a day like this because you're a momentum trader, this is when you adjust your strategy, you adjust your style. As another thing is if you're non-directional short DTE sort of income-based trader and you take a couple big losses, generally that third or fourth day, do not lose focus because that's generally the time in which you can recover. You can at least break even on the week on these days if you just maintain your same size. If you have the nerves of steel or you're confident enough, if you just increase your size, add an extra lot or so, it can actually put you green on the week, especially by the second day if you get some sort of tight consolidation. Moving right along, let's see what other notes was posted in the Discord. We'll take a look at the VIX in a second, but here we go. So I was referring to this here. Okay, so the 2-day anchored VWAP is golden after days like the past 2 days. I think one of you is like the cheat code. Yes, of course, here. And when I mentioned that once I shared the video, it was here's break and retest again, just reiterating it, just letting you, this is just showing again 397, 394. Those are the key levels. I set my alerts. I was just leaving the market alone at that point. Went on to working on the next update to QTA. There's a couple really cool features I'm planning or hoping to at least get done before the year is up. But here we go. So this was the VWAP there, and then showing you guys, this is the video in which I'm referring to. Why does the 2-day anchor VWAP work so well? So again, just for you guys that are new, I know a lot of the older members are already aware of this, but why does it work so well? So let's take a look at the volume profile for a second, and then we also have this was yesterday's point of control. So this is the break. Here's the value area. It gapped up over it, and then we wait for it to come back to the level, and then you essentially are buying in that previous day's consolidation because it's very hard after the gap up for them price to sell all the way off and break these levels. However, if it does break those levels, then it's doing something it should not do. That means price is going past where it should not go, which is very scary. And that's why I was saying if we do break below Tuesday's low, we can expect some continued selling. If I were to zoom out and then we closed out all of these studies for a second here, and we take a look at this again, this is just a pure technical analysis. They're going to look at this and see some sort of bearish pennant. Again, this is at the close of yesterday. So they're looking at this as the market opens up, it opens right here, it gets rejected. And this is the plan from the day before. So I'm obviously not aware of the future. I don't know what's going to happen on Thursday, but I already know these are the scenarios in which most other traders are going to be thinking about just because I've been trading long enough to understand these are the type of expectations for the following day. So market opens, it ends up getting rejected here, and then it sells off. If the bears were to win this fight and they were able to break below the POC and they were able to break below the 2-day Anchored VWAP. As I mentioned in the video of why the 2-day Anchored VWAP works so well, you can think of it as a dynamic point of control. If that level gets broken, then this is going to give a lot of confidence to bears because it should not break below these levels, which means now they have the continuation pattern going on, because a bear pennant is a continuation pattern, which means price is just going to continue selling off. It could break and then it could retest back up to this level, and that's where I would look to get short. And in a case like that, and then we get the continuation here, because at this point it's a little bit safer. If it just keeps selling off, then I hate those days, because those are the days where I am very nervous. Even I won't have confidence. I will short with small size, and if it just keeps selling off, I'll just just be bummed like everybody else, saying, oh man, I wish I sized up. But that's not the setup for me to size up in, because it's not the one in which I feel confident in. I wait for the break, retest, I get short here. If it doesn't work, so be it. It's fine, but at least I know what I'm trading. I know when I journal it, there's a name for exactly what I did. It's not a random place I'm just throwing money around. Another clue or indication for the following day, if we were to go to the bot request here, and you guys can see, obviously this is yesterday, so around 2 or so, whenever I'm looking to plan out the upcoming, if I want to swing anything or some sort of plan for the next day, I just run the Algoflow from GEX just to get an idea of what the options flow is saying based on their algorithm, and I can see a little bit of divergence. Again, I take this with a grain of salt. This is not an entire reason to take a trade, but I was just saying, I saw this and I was like, okay, so this is the spot price, and here goes where it's saying it belongs around 400. So there's a little bit of a bullish divergence there. As you guys know, it's not major significance. If it was around 405, then I definitely would have swung calls, but it wasn't a big enough divergence, and I wasn't seeing enough of an edge or enough of a reason to actually be long from yesterday to swing calls yet. But then I'm running the same test here, and then this time I'm just saying the past 3 days of price action, because I wanted Monday, Tuesday, and Wednesday, so 3 days worth of price action. That's what the 3 means there, just to see how much the divergence is. And it was just saying, okay, so 396, so nothing again that crazy, but there was enough of bullish divergence. So that was just adding to some confluences or just other things in which I was thinking. Here goes the market. So the market is bearish here, according to this, is saying is a little bit of bearish divergence. Again, nothing that crazy. It's just a 2-point difference. It's not really that significant compared to, as you guys know, what I like to look for, much bigger divergences. We take a look at the SPY. This is just taking the same thing but showing the net flow. So now it's showing this is the call and this is the put flow, and then we can see right here it's showing that there was more momentum, more flow in the calls for yesterday when I was running these reports. Again, this is right around almost 2 p.m. Eastern time here, and then we take a look at this right here. This is the market. So the market is saying, so this is according to GEX, market would be for all the stocks that have options, and it leaves out the SPY, so it leaves out the ETFs. One way of interpreting this is saying puts are being purchased in the market. However, you can think of this as they're hedging by getting calls in the SPY. That's my 2 cents. I don't really get much deeper than that. Again, I like to keep it simple. I just run these few little reports here, try to gain some sort of insight. The way I think of this is like I'm calling a friend. If I have an idea for what I think the market is going to do the following day, my friend in this case is going to be the GEX Algoflow. I'm going to call them up and say like, hey, what do you think about the SPY? I'm going to ask them, and then they're going to say, hey, I think it's a little bullish. And the only reason that helps me is because I already thought that the market was going to go up from yesterday. That was what my intuition, that's what my gut, that's what my analysis was saying. We were probably going to run up to 397 because the market had not retraced yet back to the sell zone. So I was expecting us to retrace to this level because we had not touched it since we broke down below it. So that's why I was looking for a reason for the market to go up to 397. However, there was no setup here. I had no real reason to swing anything. We were below VWAP. Maybe if we were above VWAP, or we were at least above back in the buy zone, I would have swung the 397 calls or maybe the 400 calls. But that was my reason for not swinging and waiting for the setup the following day, because this is a pattern. This is a setup I know. If it doesn't work, I would have taken a stop loss right below here. It would have been really small risk. Now we're just looking at this grid here. What we have again is SPY, VIX, and the ES. We also have the Qs, but we'll leave out the Qs. Here goes the SPY, and at the same time today, what do we have? We have the VIX opens up, it runs up to this level, and it gets rejected. This is one of the QTA levels. So we have a rejection of the VIX at a key level. The same time the SPY is at the 2-day Anchored VWAP. The same time the ES is at the 2-day Anchored VWAP. And then we have yesterday's point of control right here. Confluence, 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 confluence. multiple confluences across the board. This was just from today, not including everything we've already spoken about from yesterday. A couple of the other videos, again, on the 2-day anchored VWAP and the points of control videos, will add more confluence and in terms of explaining more about the psychology behind all of this, as well as expecting the retracement at least to 397. So we took a look at the SPX a little bit earlier. We also saw it on the gamma profile. We can see that the GEX was growing at the higher levels, the 4,000 level, the 400 level. However, it needs to clear this level. So I believe that was the a couple other messages in which I started saying. If we scroll down here, so this is again, today after the market close open. So if SPY does reclaim 397 and the VIX drops and even breaks yesterday's low, then a quick run to the 400 level and possibly higher is very likely. That's what I would be looking for. A little bit later, again, I'm not going to try and fish out, every single message in here, but textbook, this is the textbook. So the break, referring to that type of setup, and then we have the break, hold, and possible retest of 397 will be the key in the signs of how strong this rally really is. What I mean by that, what is mentioned there, is if this level broke today, 397, and then we retested 397 and then it holds, that is in a sense confirmation that this is actually some sort of rally that can push us up to 400 and potentially higher, especially as we're seeing that the VIX was already rejected at this level and then the VIX continued to downtrend today. So you piece this together because this is implied volatility decreasing. When we take a look at the gamma exposure, that is significant because there is a lot of put activity going on right here. We can see that there's a lot of negative GEX. So this negative GEX at the 3,900 level right here is just saying it's negative 15 million. Let's just scroll up and see what it was a little bit earlier. So at this point, it was negative 20 million. And as we scroll up even higher, it was negative 20 million. We can take a look and, again, we're not machines. This is where it starts getting a little crazy. If you start trying to keep account of exactly how much gamma there is and how much volume is flowing all this time, like that it takes away from me from the key thing, which would be risk management and identifying a proper setup and knowing when to enter and when to exit your trade, which is a little bit more important. But as long as you understand the general idea, what's happening here is all of this negative gamma, all the puts that are being purchased, so all this put volume right here that's happening in the background, this is a lot of people trading these puts, either buying them. What's happening is eventually they're going to be closing out those because they all expire tomorrow, and as those are closed out, that's going to help drive the market higher. We can see that the SPY ended up, or the SPX in this case, actually ended up closing above this level right here, which was 39.50. So all it has to do is just clear this level. So in a sense, if the market ends up being above this level tomorrow, we can almost expect this should be a nice little 15-point scalp. If you're trading the ES futures, that's 15 points times $50 per point. That is a pretty nice scalp trade just from here to here. If you're looking at it pre-market, or let's just say the market opens up right here and then it just pushes right at the open and you see some sort of other confluence, or you're reading the tape, you could probably get a nice open and drive scalp, but then expect that the 4,000 level to be of some sort of significance unless we see some more growing interest out here. But again, this expires tomorrow and anything can happen given the catalyst that we're expecting to have tomorrow. But what we can see also is that there is a lot of volume that's been growing here today, and it's been helping push the SPY higher. People are interested in calls right now, predominantly this 400 level, and then we also have this 405 level. To conclude this video, I just want to take a look also. I want to show you guys the options for a second, just making sure I didn't necessarily miss anything here. So point of control, 2-day anchored VWAP, volume profile. You guys can see the high volume nodes. Let me just make sure you guys have a visual of that with it nice and clean. Close everything off this chart, and then we can see all these high volume nodes right here. This ends up acting as potential demand. Once we gap up, price comes back to it. All these potential buyers in this area defending this, and then we end up going higher. So it's very likely we continue. Now that implied volatility has come down, it would not surprise me if we do see 400 tomorrow, just based on how much interest in which we're seeing. But then if we were to take a look at, we know that there's a ton of supply in this area. or potential supply, and that's just straight from looking at the volume profile right here, as well as the gamma exposure around the 400 and the 4000 level, and then understanding that we can potentially even go up to 402.40 tomorrow. But this right here, we would have to clear this supply. If the market ends up gapping up over this level, it's almost of a sure that we're going to be squeezing here. It might come in, retest this level. If we see it holds, then that's an opportunity to get long. If it breaks back below this level, then we might end up retracing back down to this POC. These are for day traders. This is the way you should be approaching or thinking about the market from the day before. That means if we come up to this level, you can expect us to come back down to 397, but we do know statistically the market ends up closing either here or lower, just based on the QTA levels, based on this price action, which we've seen. Again, the catalyst tomorrow can change things. The option we're going to start with is the 397 call that expires tomorrow. Why the 397 call? It should be obvious at this point. That would be the expected target. So sometimes you can just trade the option, the strike price that you think the price is going to go to in the underlying. I'm going to remove all the drawings in the background for a second, but here's the point of control. So now you guys can see it at a little bit of a closer look, because now let's just zoom into today, and you see, opens up, max pain, struggles, ends up getting rejected, comes down to the 2-day anchored VWAP. At this point, again, I'm intentionally repeating things because I'm going to be referencing this video in the future. This is not going to be the last time this exact same setup is going to come up. And what I'm going to do is I'm just going to say 1 or 2 lines in the chat, and then I'm going to post this video the day before all of this happens. And it's very likely to play out exactly the same, just like it has done multiple times in the past before. So here we go. Here's the setup. This is what you want to look for. And then you get long around here, or you look to get long, look for some sort of other confirmation. You can just set your stop loss below here, or maybe even add down here, and then look for a stop loss if we close below here and does not rebid the level or continue back up. So that's just one way to go about it. Let's turn off all of the levels and keep it clean. So just the QTA levels, and then we have the call on the right side. So what we're talking about from an opportunity standpoint, this contract's going for $1.15. If you set your stop loss below the low of day yesterday, you're talking about closing out at around 90 cents or so. So you're risking roughly 25 cents. So $25. If you're in 4 of these, that's $100 you're risking on the trade, and the profits from taking it, if you do have, the guts to hold it all the way for the profit target, which not everybody does. Obviously, it's this is idealized looking at, perfect execution and exit, but we're talking about $400 and you're risking essentially $100. So that is a 4-to-1. That is the opportunity in a case like this, and that's what constitutes as a really good day trade. 3 to run is generally what you want to be looking for. So if you're up $3 and you were risking 1, then you can obviously take it as a profit target. But just showing you guys the sorts of profit potential and full opportunity that's out here. And then the other entry, obviously, if you're not the type of person that likes to buy on the dip and you'd much rather look for some sort of confirmation, this is where you can get long on the breakback over VWAP. And you guys know I did a video a while back on, let's see if I still have the style on this computer. It is the 3-minute. No, I do not. So I'll show it at the end of this video for a second, just so you guys know that setup. It's the 3-minute time frame with the 9 EMA. It's the 9 EMA VWAP crossover following the 2-day anchored VWAP. I've done at least 3 videos on that topic before, and I will leave a couple of them in the description down below. But again, if you're nervous buying as something is selling, off, even though it's on support, you can wait for the confirmation as price gets back over VWAP, or it gets back over, your EMA, or maybe this is the EMA down here that's adding Confluence. So the opportunity here, golden. Now, if you're not interested in the 397, let's just say you have a really small account, you can trade something like the 400 call. So I have these added to a watch list because that's something that you do to prepare before the market opens. Yesterday, as the market closes, obviously you can add these to your watch list because you already know the ones you're going to trade. It's either going to be 397, 400, or you're going to be trading the 394 put or the 390 put, depending on where the market ends up gapping up or gapping down, or if it opens flat. Because these are I'm just adding these key levels. That's 397, that's 394 is this level, and then we have the 390 level, and then we have the 400 level, which is P1, N1, and weekly weekly support, and then the bottom of the zone. So those are those 4 levels just saved in a watch list, so I don't have to be stumbling around the options chain as the market is open. But here's for a smaller account, and now we're talking about 45 cents is the 400 call, and this is it at this point right here. And then around the profit targets, we're talking about the same, about an 87% return, so about 40 bucks return. So from yesterday's low, if you're stopping out on a close below there, so you're essentially risking about 6 cents, so $6. So if you're in 2 of these and you only have $100 out on the trade, it's technically 90, but I'm just rounding everything out. You're risking 12 bucks to potentially make 80. This is just good trading based on a good setup. If we continue right along now, we can see now the market is up here, and let's just say you're a very hyperactive day trader, scalper, and you like trading every single opportunity, and you have perfect, mental focus, and you can be long and short in the same day and stuff like that, then this is your next short entry. You get a little bit of this rejection here, and you see the way that's unfolding. So you would already have the 394 put loaded up. This is the 394 put, or obviously you can go with the at the money put, but I don't have that one saved on this chart here. But your profit target is going to be VWAP, so let's pull that one up and take a look. I believe it ends up being about the same here. So we have a 47% return. So not as good as the call, but we can see this is obviously not as big of a drop. Maybe if it went all the way back down to a low of day, it would have been twice as much as this. So about 80 something percent return. But in this case here, 47% return. So about 48 cents. Stop loss again is a little bit on if it breaks over this level and then it closes above it and does not drop back below it within the next minute or two. That is just a practice in which I have. If you've heard me mention rebidding many times, that's what's referred to as rebidding. So if you're buying on support and the level breaks, if it doesn't rebid it, it means it doesn't come back within that level, then you're taking your stop loss here, because obviously you don't want to stop out just because the level breaks, because it can always just bounce right back over it, and then you ended up getting stopped out in a stop loss hunting process or something, and you want to size to give yourself the room to be able to hold something if it's going down. I generally will open the trade. I already know the risk. It's predefined for me if I am day trading, because in this case I didn't have to do most of the scalping because I had my positions already set. I had the iron flies, I had the butterflies. I was using it to manage the positions in which I was currently in, and then I had all of these calendars that were targeting 400. So the 400s was just taking profit around these areas, as I mentioned, I believe towards the end of the day, somewhere in here. I think I just came in case any of you guys are still in it. So I took some profit on the 400 call calendars, and I left half the size. So this is just the profile at the time being, and this is my current profile again. So I'm very light right now, not much risk out, and I'm just going to see how tomorrow plays out and adjust accordingly. But here you guys see, so from here to here, 40 something percent, and then let's jump down to the 390 put. And that would be using this one as the targets. And this is, again, also really deep out the money, really small accounts. I used to trade these way back in the days. It was fun. Buddies of mine, we'd be on the mic and stuff like that, and just trading around these really tiny contracts, grab 10 of these or so, just trying to grab 50. Sometimes you get lucky, and if this ended up just rolling over towards the end of the day, you get a 300% return to end off the day on a Friday or something like that. It was crazy, but I don't really trade that much like this anymore. But as you guys can see here, equal about 43% here, so $16 in profit, again, for a really small account. This is just trading from here to here. So hopefully this provides a little bit of context for you guys. 40 to 80%, 40 to 100% return is what I would say is some sort of an expectancy if you're trading such short dated options. And I said lastly, I wanted to show you guys the different layout. So if you're doing the 3-minute chart and you have your studies on and you are a momentum based trader, you can put on the moving average exponential, set it to 9. I hate this color for the charts. I usually change it to this one, and then press apply. Okay. And then you guys can see this right here. So this is the Confluence. This is the 9 EMA. You turn the after hours off, and then you let price gap up, retrace back to the 9 EMA. There's the 9 EMA. There's a 2-day anchored VWAP, and you can get long here. And then you add on this crossover. So right here, this is called a 9 EMA VWAP cross. Let me just scroll back so you guys can see it a little bit bigger. You guys can see this cross happens right here. It's adding confirmation of momentum. You want to see volume increasing as prices going higher, and then you essentially look to scale out. If you see something like this, some sort of rejection with high volume, you can take profit right here. This is assuming, again, you don't have any other levels or so on your chart. So this was how I used to momentum trade or day trade and stuff like that. It was this exact setup here. Guys, I hope this video helped a lot of you guys. I'm thinking of it more at this point as a webinar as opposed to just a singular YouTube video. Webinars are usually about 2 hours long when I used to do them a little bit more frequently. Focus right now is trying to get the next major iteration of quant trading app out. The next major update is based on historical gamma exposure levels and trying to provide a lot more statistics around the gamma exposure levels to really help us hone in on, if you are directional day trader, scalper. I've been having a lot of one-on-ones with some of you guys that are finding tremendous edge also, and I'm trying to incorporate some of the things that you guys have shared that you've noticed in some of the updates. I don't know if I'm going to get it up before the year is out. That was the initial plan, but I've been held back up because I'm obviously trading also and trying to help out as many of you guys. So it is holding me up and taking a lot of time. Ideally, I'm aiming for the end of the year to have it out. If not, it will definitely be up by, I would say, the second week of January is really what I'm aiming for. Even if I have to start rolling it out in increments, just know there's a lot in the works right now. And again, hopefully this clarifies a lot of the stuff that you guys can piece together. You can watch this video a couple times. We talked about the gamma exposure, the volume profile, the QTA levels, as well as a little bit of the options chain. If you're trading non-directional with ironflies, when to trade them. If you're trading directional, 0 DTE, 1 DTE options, there's a lot packed into this video, and I kind of did it on a whim, on the fly. I'm going to try to get this up tonight. Let me know in the Discord if this really helped you guys, and I'm looking forward to hearing from you. Take care. Enjoy.